right, ladies and gentlemen.
Didn't want it anyway.
It literally is exactly the same, except what?
The margin.
Okay. Yes. So yesterday we went through and posted to our accounts payable ledger. So we have a subsidiary ledger for accounts payable. Accounts payable are vendors, people that we owe. So in 11.2, we're doing the same thing, posting from our journals, but we're not posting from purchases and cash payments. We're posting from sales and cash receipts journal and our general journal. And up here, let's take a look at our subsidiary ledger account for accounts receivable. Eyes up here, eyes up here. Otherwise, you're going to start typing, and then you're not going to hear me, and then you're going to be confused. Notice what it says here. What did it say yesterday? Okay. And then over here, customer number versus. Now, customers are accounts receivable asset account, which starts with what account number? 1. Okay. So we are going to have our subsidiary ledger is going to have a three-digit account number starting with 1 to indicate that it is an asset, and assets have a debit normal balance. Moving left to right from down below, you're going to see we have our date column, just like before. Item column, just like before. Post reference, debit, credit, and then again the main difference from yesterday to today is instead of it saying credit balance, we have debit balance. But really, all we're doing is posting from our journal to our ledger, but now we're just focusing on customers instead of vendors. Everything else is going to roll through exactly the same in what we did. Now, one of the struggles we had with application 11.1 is they wanted it to be in date order. I hate that assignment because in no other time is it going to be in date order. Please make sure you read those directions, okay? I'm pretty sure they're going to do the same thing to you on 11.2, but I don't remember off the top of my head. Okay, so we're going to go through and follow our directions. The first thing that they're going to have us do in our directions is open up an account with a balance. So the only time that we write anything on the item column is when we have a balance. Lincoln's like, I don't need Mrs. Grassel. See, he's just ignoring me. So when we have it in the item column, that's when we're going to write the balance portion in there. Otherwise, most of the time it's going to be left off until we get to the point when we have to write off accounts. What do you think write off accounts means? Okay, let's say that Brett over there was a customer and bought something from me on an account. We assume that Brett is going to what? Pay. What happens 2 years from now if Brett still has never paid me? That's what I would have to do, is I'd want to write it off to say that Brett was a customer but didn't pay. Does that happen in real life? Yes. So as we get further on into accounting and taking a look at transactions that we record, we go through and we have to realize what are the things that happen in life that just does occur? You know, damaging merchandise. We have customers that don't pay, and we have fees and different things associated with that. So we have to know how to get that recorded. So let's go ahead and start on this. So our directions read, partial sales and cash receipts journals for Graphic Inc. are given below. Also given below are 1 blank accounts receivable ledger account form and blank form for preparation of schedule of accounts receivable. You will need the general journal shown, and your instructor will guide you to the following example. Instruction number 1. Start a new page for an accounts receivable ledger account for Brandy Sparks. The account number is 140 or 140. So I'm going to put the customer name of Brandy Sparks in, and then I'm going to put 140 for the account number. We have a balance as of October 1st of the current year. And that balance is $212. Please make sure you put, a check mark in the post reference to indicate that you did not get that from a specific journal. Instruction number 1, Rockstar did it. Moving on. Instruction number 2 tells you to go to your sales journal and post from your sales journal. We only have one line that we're going to post. Now, here's the only thing I want to say about our sales journal. We're going to post just like how we normally have, but here's our problem. We have 3 columns of numbers. Okay? When we look at our sales journal, right here, what does it say? Accounts debited. It doesn't say accounts. So it tells you whatever is here has to be debited. Agreed? Now, when we look at our columns over here, we have 2 credits and 1 debit. Agreed? So which column are we debiting? Which amount are we debiting? The accounts receivable column, right? So we have to make sure that we do this. We don't want to post the value of sales or the value of sales tax into that. We need to make sure we use this number. So for Brandy Sparks, we're going to post that $576.64. So we'll put the date of the 20th on there. Now, post reference is what? S for our sales journal, 10 for page 10. Not A. And then I'm going to debit for $576.64. Now, Brandy had a previous balance of $212. So I have to add $576.64 to it. That's going to give me a new balance of $788.64. Did I do the math right? Oh, thank you. Okay, that is instruction number 2. Instruction number 3 tells us to go to our cash receipts journal. So I'm going to go to my cash receipts journal, and I'm going to be taking a look at line 9. Now, when we take a look at line 9, you can see in the account title it tells us Alfred Lopez. All right, Alfred. So when I look here, which column am I getting the numbers from? Accounts receivable. Very much like we did our sales journal, we want to make sure that we use our number right here from our accounts receivable column. So we're going to go ahead and do $254.40. And is that going to be debited or credited? Credited. So we'll put the date in here of the 21st. What is my post reference? CR, standing for cash receipts, 12 for the page number. And I'm going to credit it for $254.40. And I'm really smart. My balance is $1,272. Count number 130 goes back up on top. That was instruction number 3. Instruction number 4 tells us to look at our general journal. So I'm going to go to my general journal. So when we look at our general journal, we can see on line number 3, that's what we have to post because that's the only spot we can fill something in. When I look at line number 3, basically what we have is we have a customer that has returned an item to us, and the total amount of the item that the customer returned, the value of the product, and the sales tax is $55.12. So I'm going to go ahead and find David Bishop. Good old David. The date of that transaction is the 12th. And I'm going to go ahead and do G1211, and then I'm going to go ahead and credit David for $55.12. David previously had a balance of $238.50, so I'm going to minus $55.12. And when I do that, I get a new balance of $183.38. Caleb, how did I do on my math? I'm sorry, say it again. That's what you got? We concur. Concur. We agree. That was my fancy word for the hour. Use that sometime today. Okay. Now, instruction number 5. Prepare a schedule of accounts receivable for Graphics Inc. On October 31st of the current year. Accounts receivable balance in the general ledger on October 31st is $2,530.22. So, we scroll down. Here is our subsidiary, our accounting form for recording our schedule of accounts receivable. Name of the business goes on the top, which is Graphics Inc. Name of the document was the schedule of accounts receivable, and then the date, which is October 31st. To prepare my schedule of accounts receivable, I start in my ledger with my very first account, which is David Bishop, account number 110. If it has a balance, it goes on my schedule. So I write in David Bishop. And then I go ahead and do 183.38. Then I go to Maria Farrell. She has a balance. She is going to owe us $286.20. 20, not 50. Alfred, 1,272. And then good old Brandy, we just opened up her account. And Brandy owes us $788.64. What goes below Brandy Sparks? Total accounts receivable. So yesterday when we did our schedule of accounts payable, we had to write total accounts payable. Today we do total accounts receivable. The main thing we need to remember at the very end, your total of accounts receivable needs to equal the balance in the ledger account of accounts receivable of $2,530.22. And I equal, so I do my happy accounting dance. Woo woo. Just like you all do.